We're going to start with and go around the room. What's step one?
351.
Okay, but did we check the box?
Yes.
Okay, if we check the box, we're under what revenue ruling?
84,111.
84-111, situation what?
1.
And what situation 1 say?
The assets in the new were
And then,
And then the interest, what? You're doing great, Natalie. What?
Oh, okay. So you put the assets in the new S corp, and then the shares of the S corp are according to your partner, the old partnership interest.
Distributed out of the partnership and
Yeah.
liquidation of the partnership.
Yeah, that's
Okay.
what I meant.
So if that's the case, you're saying the partnership contributed the assets. So who's my contributor? The partnership. What is the partnership contributing?
It's assets.
Okay, so what are the partnership assets that are being contributed? Building. Okay, so what's the elements of what is our starting point when we check the box, Lucas?
351?
Oh, yeah.
And what's 351 say?
Step one is determining whether or not it's taxable or tax deferred.
Okay, and what are the three elements that help us diagnose that?
Exchange of property for interest,
Stock.
stock. And then that's steps 1 and 2. And then step 3 is do you have 80% for control?
Okay, we didn't really transfer anything, but we were deemed to have. So we were deemed to have transferred assets in exchange for stock of the corporation, and then transfer or the partnership. Did it have 100% control?
Yeah.
So we meet the elements of 351. So where do we call in somebody else?
Trent.
Trent, where do we stop next?
357C,
357C, and what's 357C say?
debt in excess of basis.
Do we have debt in excess of basis?
Yes,
And why do we stop 357C again?
because it affects 358 and 362.
Affects 368 and 358 and 362. So, and we do have debt in excess of basis.
Mm-hmm.
Okay, how much debt in excess of basis do we have?
60,000.
Is that true? That looks true. So we have a 357C gain of 60,000. Okay? So next, where do we go next?
358.
No, in the room, sorry. That was poorly phrased.
Where's I don't know.
Who's the next victim?
Jack Chambers.
Jack Chambers? What's the next provision?
358.
358. What's my formula for 358? This is why, remember that summary page?
Yeah.
That's why we put it posted on the summary page.
Put a post there, about 1,000 posts.
Okay?
So it's original basis plus the 357C gain recognized,
Yep.
plus like debt relief
Yep. No, minus.
or minus debt relief, I guess, plus boot paid.
Whatever the hell that means. Okay, so what's my basis in the asset?
0 because you had a 357. Oh, basis in the asset.
Oh, no, basis in stock. You're right. I was on 358. I lost track, not you, Jack.
It's 0 if it's. You can assume it's 0 if it's.
What's my old basis? You can assume it is, but let's do the math anyway.
40,
Gain recognized,
60,
debt relieved.
100.
100.
So 0.
So 60, 40 plus 60,
This is
100
food.
minus
Debt
100 gets us 0.
Yeah.
Who's our next victim?
Jimmy.
Jimmy. What section do we move on to next?
362.
And what's 362 say?
The corporation's basis in the assets received.
What's the formula?
Old basis plus the 357C gain,
Okay.
which
And what
would
is
give
that?
us 100K because the original basis is 40K plus the 60K gain. So be 100K.
Okay. 100 grand. Okay, where do we go next? Who's our next victim?
Go Natalie.
Natalie? Hold on, you can't, weren't you our starting point?
Kinda.
Okay, somebody else other than Natalie. Lane, what's the next one?
What did you talk about? 362?
He did.
12, 22, 1.
Okay,
So it's the holding period.
for what?
The assets.
for the stock.
Okay, yeah, 2 is the assets.
Yep.
1 is the stock.
Yep.
Well, you didn't give
Yeah.
us a date.
So it's tacking.
Just say tacking.
Carryover.
Carry over.
Okay, fair enough. Who's next?
Almost.
Thomas, where do we go? What's our next provision?
1223-2,
And what's that say?
holding period of assets received by the corporation.
Okay. And what's with the holding period? Do I have 1 or 2 holding periods?
2.
Did Jameson whisper that?
I heard you from
Nice.
here, James.
I sneezed.
You sneezed?
That was a very dainty
There was
sneeze.
one left in the room, he said. It got me.
Oh, you got it. Okay, 2, which is the holding period of the building as it stands under 168 I-7,
Mhm.
and the amount associated with 357C gain that I can't remember. Is that you, Trent?
357C, yeah.
That Trent so eloquently told us about. So now the dust is settled. The basis in the units or the stock held by the partnership is, what was it? Who was my basis person? Was that Lane?
No. Well, no, it's Jack. Yeah.
How much was it, Jack?
0.
0. So the partnership has 0 basis in the interest in the stock. So now the next step of 84-111 is what?
We already did 12.32, right?
Mm-hmm.
So 168 I-7.
Yep, but
Which is depreciation. It's good.
step in the shoes. Yep.
So for the building, you kind of pick up where it left off. So like the 40,000 continues to be depreciated.
Yep.
You have that same holding period. And then the $60,000 gain is a new asset that you would allocate basically to the building. So it's a 39-year asset.
39-year asset. Okay, but so now we've got the basis on the balance sheet, right, of 100.
Yeah.
We got liability of 100, equity of 0. And so the partnership though has stock in the partnership, or has stock. That stock basis under your formula was 0, right? So what happens now under 84-111? Does the partnership go away?
Yep.
It does. So the partnership is now distributing the stock. And who is it distributing the stock to? To Jeff and Pete. Okay, so what was my ordering rules for distribution out of a partnership? Basis is depleted first by, and then the remaining goes to the assets coming out. Was there any cash that came out? Okay, so Pete's basis, well, first of all, how much gain was generated under 357C?
60,000.
60,000. Okay, so you might want to just, as a reference, write down $60,000 a gain was generated. How much basis did Pete have in his interest prior to the
100K.
transaction? 100K. How much did Jeff have?
Negative 30.
Negative 30. We'll stick with negative 30. We're not going to worry about debt basis because that's just going to muddy the water. Trent, how much gain was generated?
60,000.
And if that's the only activity that the partnership had for the year, does the partnership have an obligation to report that on its tax return? The 60.
No. I would think so. Why wouldn't that?
Exactly. It does. So how much income was generated?
60,000.
So we're 50, Jeff and I are 50-50, correct?
Yeah.
So I'm going to get a K1 that says how much gain goes to me.
30,000.
How much goes to Jeff?
30,000.
Okay, so now you have K1s. And we all know over the past 2 or 3 years, and what's that form I love so much, Lucas? The 7203? What is it? Basis. I hate it. I don't want to be the government's reporting arm. But my basis, my beginning basis for Pete was what? 100. Jeff's beginning basis was negative 30. So now we get a K1. Do we adjust the basis schedule? We do. So Pete's beginning basis was how much? Calling somebody, Trent.
Ansel.
Fine. Ansel, Pete's beginning basis was, I was going to leave you alone, but he did that with such sincerity, and he wanted to pimp you around.
100,000,
Okay, and his K1 was?
30,000,
His ending basis is now
130.
130. Ansel, who you want to call on? If you want to go back to Trent, I don't blame you.
Trent.
Trent? Jeff's beginning basis was?
Negative 30.
His K1 was?
30.
His ending basis is?
0.
0. So now we have the ordering rules, because we had to adjust our basis for the K1 that's coming out because you had the gain generated at the entity level. So the ordering rule for partner liquidation or distribution was what? Calling somebody. I'll let you do that. And not Ansel.
Disler.
Have you? Okay, you've been picked on quite a bit. They've left Nicole alone for a little while. I was actually tracking because they were going to Nicole a lot, and I was seeing if there was like another conspiracy. So the ordering rule for distribution out of the partnership is what first?
Cash.
And cash, if cash comes out, what's it do to basis?
Reduces it.
Reduces it. And if you have basis remaining, what do you do with that remaining basis?
You take the assets against it.
You allocate it to the asset that you receive in distribution. Did any cash come out of this partnership? No. So Pete's revised basis after K1 was what?
The 130.
130. So Pete's going to get 50% of the stock. What's his basis in that stock?
His basis is, I don't know.
It's right there, Jack. It's right in front of you.
Would it be 0? Or
How do you feel about
negative
that?
30?
How much?
Negative 30?
Wow, now this is finally tax Tourette's. I've been waiting for it. It's word salad. So we have remaining basis of how much?
0. I'm going to say that.
Now you're spinning yourself in the ground. Call for help.
I need some help.
Who you want to call on?
Kaylee.
Kaylee? Uh-oh. I got a deer in the headlights. This has gone off the rails. What's the basis in the shares received by Pete?
0.
That was wrong for him.
Back to the top because
Okay, so
we're out.
Yeah, I got a little lost in
do it.
He was at 130.
Yeah.
So,
And then we were-
okay, so now Lane's taking over. Tell us what we got, Lane.
So we have 130 of the basis.
In
so
what?
Now in the
Partnership interest.
yes. So then we're allocating it to the assets.
Okay. And what asset was received in liquidation?
What did we have? I don't know. Building.
Jesus Christ.
Where?
What was the first part? We incorporated.
Which I'm confused.
Okay, so let's
Yes,
rewind and
yes.
let's back up because this is gone.
Was it not a building?
Yeah. Or
we're
partnership.
liquidating.
The partnership
Oh
liquidated.
shit, are you guys?
We got lost.
Just call it today.
I'm about ready to, Jack.
This analogy.
And this is like, it's right there and all of a sudden it goes boo. I don't know what the hell just happened. Okay, so let's back up. Let's take it from the top. Okay? We have a partnership. And the partnership, dear God, has a building with 40 of basis, right? It has 100 of debt and negative capital is 60, 30 and 30. We check the box. All those assets, I think, under check the box, go into a corporation.
Yes.
So now you have to run the rules of 351, which we all just successfully did. But we all seem to forget it, that that's what just happened. So now the partnership recognized a gain under what section, Trent?
357C.
357C, because we had debt in excess of basis. But the asset that remained in the partnership after we went through all those hoops was a building? Jack says yes. No. Stock. stock in the corporation, because we transferred the building, we transferred it as deemed to be transferred to a newly formed corporation in exchange for stock. What are those three elements again? Transfer property, exchange for stock, control immediately after. So that means, what do we have immediately after? Stock.
Stocks.
Yeah, we don't have a building anymore. It's inside the corporation. Okay, and that $60,000 gain from debt in excess was put on the K1, which adjusted the outside basis. So now the partnership has to liquidate. The only asset it has is stock in the corporation. So, did cash come out? No. So Pete's basis started at 100, went up to 130 because we had a K1. No cash came out, so Pete's basis was 130. And what did it distribute, Jack? If you say building, we're going to stay here until 5.
Stock.
Stock. So the basis Pete has and the stock he receives in liquidation is 130,000. And Jeff's is
0.
I love, because when we're doing it together, it is like, oh, this is so easy, right? But as soon as I let you free range,
Hey, we did good until it.
it went, Jack, you took him right in the ditch. I mean, you completely caused utter chaos. Yes.
So, could you walk us through then the balance sheet for the new core? Because I think
You
that's
have
what
it.
I'm getting. I do have. Okay.
What is it? Tell me, because I saw you write it down, and you
Seem pretty confident.
So
Well,
tell me.
that was before you took us all off.
I did nothing. It was Jack.
Well, the question I have is on the balance sheet. I have both of them with a capital account of 0.
Yes, that's
Okay.
right.
Okay. So the tax basis and the capital account are not related. Then.
By virtue of the liquidation of the partnership, there is now a disconnect in between the tax basis, because you're inheriting this revised $130,000 basis by virtue of the liquidation of the partnership, not by virtue of the incorporation of the assets of the partnership. Those are two separate and distinct taxable events, not connected. They're distinctly different and have to be accounted for what they are. Should we do it again? Well, but you know what? I mean, that mayhem is, yeah. I mean, there was a fair amount of failure in the middle of what we just had there. But the failure is learning. Because you're going, well, you know, it all seemed to make sense when we were doing it, and as soon as I got to apply and do it on my own, all hell breaks loose. And now I got to take those concepts that I've learned over the past 3, 4, 5 hours, whatever, keep them all together, keep them congruent, have them fire. That's why we started 351. That's why I say we got to go 357C, and you got to take it piece by piece by piece and run the traps. Actually, I enjoyed that, Jack. Thank you. No. No editing that out. Let's see.
So just to confirm,
Oh my God, the answer is on the next pages.
Didn't know that.
I thought it would be cheating to look at them.
Leo.
can I confirm something?
Do what?
Can I confirm something?
Sure.
So Pete's outside basis is 130K,
Yes.
but like the balance sheet, it will be 0.
Yep.
So there will still be an internal, external.
Yep. And that's why when we were talking earlier and I was confusing Jameson by pointing at situation 2 over here, because I was playing the fact pattern, you're harvesting out the exact problem. This is showing the exact problem I was saying, that if you choose a different methodology under 84-111, you can recapture that 130 difference by choosing a different method. This one screws you by checking the box. Do what?
Scenario.
Situation 1, correct. Okay, I think, look at this, man. I think the answer was there the whole time, right? This is, you know, here's the rule for the liquidation of the partnership interest. you might want to footnote or put a flag or whatever on this page because that is a useful rule to know. Okay? At some point, I promise you, we're going to be coming back to 351 accidentally or on purpose. I'm not sure which is going to happen. Because we'll be talking about a scenario and I'll accidentally pop back into a concept we talked back before. And keep in mind the ability to apply that even if you struggle, even if I'm going to say we Jack Disler it. And I say that, actually, Jack, you cracked me up. If that's offensive, I'm sorry. I'm not trying to be. Because that was just great. The turmoil, the whole room went to hell in a handbasket. But we're going to, I guarantee, at some point be revisiting 351 through 168 I-7. It's worth knowing. So especially, how often do we file 2553? To check the box for an LLC? All the time. So our ability to capture, the basis schedule, 358 is your beginning basis schedule that you're going to keep in perpetuity. You have to know what to put on the balance sheet. You have to be able to construct that first balance sheet for the corporation. These provisions tell you how to do that. Okay, 1001. What the hell is 1001? What's my favorite rule?
Lane.
No,
You have so many of them.
No, I always go back to proceeds.
Oh, debt relief, cash, property.
Yeah. So 1001 is applied equally across both. And the reason I have 1001 in here, or Sailor Exchange to me seems like it ought to be a monstrously simple concept. I sell something, you buy something. It should be simple. Not so much. So 1001, Lane, who you want to call in?
Natalie.
Who?
Natalie.
Natalie, have you been getting picked on quite a bit?
I feel so.
Do what?
I feel like I have. Just kidding.
Trent. I'm such a good Trent.
Hold on. Are you this year's Nicola?
I hope not.
No.
It's not that bad? Okay. Well, Natalie, all your peers think that you should be taking this. What's the definition of proceeds?
Cash, property, and debt relief. Yeah.
And why do we care about the definition?
That's how we calculate the gain.
Yep, you compare that to basis. And then your gain or loss. Okay, and where I think this becomes difficult let me ask a question. I have a building and it has a fair market value of $10 million and a basis of $1 million. Natalie, what's my inherent gain sitting in that building?
9 million.
9 million. Okay. And let's presume a 30. Let's make it 11 in. Which makes that 10. If I have a 30% tax rate, how much tax do I pay?
3.
3 million.
Yeah.
Okay. So if I sell the building, my cash, which is only a subset of proceeds, my cash is $11 million. How much tax did I pay? 3. My after tax is
Blaine, you're quick. Come on.
Call on me.
Huh?
Don't call on me.
Come on, you can do 11 minus 3. Thank you.
I think
Hey.
it's actually 12.
It's 8. So how much do you get to deposit in your bank account? $8 million. Okay? So what if we now say fair market value is 11, basis is 1, and I have debt of 4? How much is it worth?
What'd you say?
There's
Debt's-
debt on the building of 4.
Oh, okay. So
How
then
much
you
is the building worth?
15? Oh. I'm
11.
confused.
The only thing you'll ever get out of this building is $11 million. How much cash are you going to get? Let's do it this way. Let's say that you get. Let's do it this way. So we'll keep going down the path. You sell it for 11. Your tax is 3. Right? Okay. 30%. 3 million. 3 million is coming out. I don't get those dollars. Okay. You owe the bank $4 million. So you have to pay off the debt, don't you? $4 million. How much are you left behind after tax and after debt?
Blaine?
4. Right? Okay. So they gave you your $11 million of cash. They left you responsible to pay the tax and the debt. Okay? So over here, that would be 11, 0, 0, 11, 1, 10, right? 11 of cash. They gave you 0 property. They didn't assume any of your debt. Right? So, what if they say, well, wait a minute, we'll just take the debt. We're not going to worry about you doing it. So at this point, you have 7 of cash, 4 of debt assumption, debt relief, to get you to 11. You still have 11 of total proceeds, 1 of basis 10 times your 30%, 3 million. Okay? But your cash received is only 7. You still get into 4. So debt somebody can assume your debt, and you get to the same answer either way. They gave me 11, but I was responsible for paying off my own debt. Or they gave me 7 and they assumed the debt. Proceeds, fair market value is fair market value. You get to the same spot. Okay, so where this comes out, where this manifests itself is AR, land, debt, equity. Let's say 1,000. Let's say 10,000. Let's say 7,000. And let's say 4. Okay, am I in balance? 11, 11. I'm in balance, correct? So if somebody says in a business acquisition, I'm willing to pay you for this company $20,000. You have 20,000 that they'll give you. That's your equity section. You have 7 that's debt. They're going to assume. This is 20. AR is what it is, 1,000, which makes the fair value of your land 19,000. So now when you have to look at this through the lens of how does this work, it's, well, I received cash of 20, debt assumed of 7, 0 property, 27. My basis was 11 for 16 to gain. So being able to convert a balance sheet into this formula, we do it all the time. mean, that's just part of what we have to do. So, but now you come back over here, you say, on the asset side of the balance sheet, I got 0 gain in my AR. You know, I have 9. Well, fuck, how's that work? 27, you idiot. Jameson, you missed an opportunity. It's 27. It's 26. That's 16. Inherent gain, fair market value, basis. 16 popped out over here, right? But when we compare it on a balance sheet basis, on an asset by asset basis, 16 pops out over here. So the definition of proceeds needs to include cash received, property received, and debt relief. Because you're always going to have debt on the liability side of a balance sheet that you're dealing with. And if you aren't paying attention to that, you have an opportunity to miss a portion of the gain and be wrong. And how often have I been wrong, Lucas, in my career? A lot. But you don't want to be wrong, right? That's not fun. So why are we even talking about this? Because there's this concept of proceeds, but there's also this concept of fair market value. And they're all intimately tied. So let's talk about why we're talking about this for just a second. There's code section 311B, which we're going to talk about. And there's code section 336, which we're going to talk about. And what that says, what these code sections say, is when a corporation has an asset, it's deemed to sell that, and it distributes that asset, it's deemed to sell that asset at fair market value. And that deemed to sell the asset at fair market value, you're under the rules of 1001 to categorize or characterize or calculate that gain. So 1001 is inherent in the procedure under 311B and 336. So what 1001 says, I don't know what it says, basically says proceeds are what I have up there versus basis, and that's your gain. But 336, 311 have the concept of 1001 fair market value. You have to compare the fair value of the asset to the basis of the asset to come up with a gain and report it. Okay, so let's run through these simple facts pretty quick. Jim owns land purchased for $50,000, which is appreciated to $100,000. Jim has a buyer of the land. Possible scenarios: Jim sells cash for $100,000, sells it for $50,000 cash, $50,000 of debt relief, $50,000 boat, $50,000 debt relief, $100,000 debt relief, and $100,000 boat. Seems fair. Okay, so, that's interesting. I got $60,000 of basis there. I'm not letting you catch me on that, Jameson. I caught my own shit. Should be 50, but I got an error. So I got 100,000 of cash, 0 debt, 0 property, 100,000 proceeds compared to basis, 60, 40 of gain. 1001 tells me that I got a $40,000 gain. If we have $50,000 of debt, I get $50,000 of cash, $50,000 of debt, 0 property, 100,000, still the same $40,000 gain. I got 50,000 of debt, 50,000 of boat. I got 0 cash, 50 of debt relief, 50 of property, same $40,000 gain. I got $100,000 of debt. I got 0 cash, 0 property, same $40,000 gain. I got the boat for $100,000, $40,000 gain. So let's see, we use 1001 all the time. Let's see. Simple transactions can have 1001 applied multiple times. Distribution of appreciated property out of an S Corp. Distribution of appreciated property out of S Corp with C Corp history. Distribution of appreciated property a redemption, distribution of appreciated property, redemption, sale of assets, sale of assets. That's the sale of assets. We have distribution of property. The point being, when you have these other provisions apply, and the only reason I'm bringing up 1001 is you have to do a gain loss calc when you have the distribution of this property.